might have heard that inflation is coming back, right? Inflation is reaccelerating. That's kind of the narrative right now. That's what's bringing the market down into the future, even though we did recover. That's kind of what the narrative is. So we're going to address that, right? We're going to address that. We're going to debunk that inflation is actually reaccelerating. Okay, yes, is inflation high? Yes. But for the stock market, for the equity market, for risk assets, for your investments going forward, depending on what you're in, what vehicle you're in, right? That's going to matter, the path that they take. Inflation is not coming higher at the moment. We're not seeing that. So let's get into it. This is the new intro. Let me know what you guys think. Let's go. Welcome to the show. Let's go. Let's get started. Okay. So, yeah, I think we're going to get a Santa Claus rally here. And the biggest reason, right? One of the number one reasons is inflation not reaccelerating. And, where do you get inflation expectations? Where do those expectations actually come from for the most part? Well, they come from consumer spending. We know GDP is going to be slowing into the fourth quarter, right? From 4.9 to 2.3. We're going to track that. Well, it's not going to come from energy prices because today, right? This is the actual chart we're looking at. This is the chart of oil. See if I could put it here for you guys to see. Okay, well, inflation has been accelerating to the upside, right? On the headline, right? From energy, not from shelter, not from vehicles. And we're going to go over all the inflation data because that's what we're here for, to disprove that, to show you that the Santa Claus rally is here. This is the macro setup. This is the macro setup. Does it follow through this time? I don't know. We'll see. We'll keep track. But right now, the trajectory is definitely that the macro into January should be pretty good. Okay. So oil prices, right, accelerated in this month. What month was this? This was July. So that, that energy inflation converted into CPI. Same thing here. Same thing here. For the first time in a long time, I think since June, what is it? Since June, we actually had inflation start the month off high and end the month lower. Inflation. Why do I say inflation? Because oil is the biggest input to inflation. Okay. So go ahead. Core is coming down. Core is starting to cool here. But when we talk about oil prices spiking, that was the big bear narrative, right? If oil spikes, the war is going to make oil spike. Sure, that's a possibility, but we're not getting that. So that's why that's one reason the market can keep rallying. So what does this also tell us? That CPI is going to come in pretty good. I think CPI really surprises everybody. I don't know why nobody's like pointing this out. CPI should come in, much lower than expected. Maybe not much lower, but lower than expected for sure, especially with GDP being revised down and oil prices falling. How much did oil fall from the beginning of the month? How much does that play into it? I don't know, but that's a 10% drop. And it looks like it's going to keep dropping. Why? What is the main reason for that? Let's just literally dive into this. Okay. The main culprit of oil is demand is falling. Okay. Demand is falling. Where's my chart at? Here we go. So US is the United States is the biggest consumer. You guys can't see it on TikTok, but the US is the biggest consumer of oil. Well, demand peaked for the US, and that demand is falling. And we're actually going to go over an article that shows gasoline is also falling, right? Gasoline prices are starting to fall. And at the same time, we're producing oil at the highest rate we have. We are literally producing oil at the highest rate. So let's go ahead and check out that article. You guys will be able to see this also. Oh, here it is. All right. So let's move this out of the way. Here we go. Here we go. We got that set up. So this is wage growth. We're not at wage growth yet. We're going to go over all of inflation here. This is what we're going to look at. Okay, gas prices plummet as some states fall below $3 a gallon. Are you in a state where oil is below $3 a gallon? I bet nobody expected this. Nobody was expecting gasoline prices to get below 3. Nobody was expecting this, but now we got it. Okay, can it be sustainable? I don't know. This is a volatile market. Okay, it is volatile. You cannot guess the future, but you still got to look at the data ahead of you, right? The data in your face and say, what is the market thinking about in the next 6 months if this continues? Well, it's going to have a rapid rally. The markets overcorrect to the downside. They overcorrect to the upside, which is why I think we see this vicious upside rally that we already got a baby rally in this last week that we called. If you check out the shorts, if you check out all the videos and all, if you stay tuned into the onto the lives, onto the show. We've been calling this rapid rally. Okay. So US households are suffering from the pinch of rising prices. Yep, 100%. The national average price has dropped about 35 cents a gallon from the peak in 2023, which was mid September. Well, that aligns up literally, that aligns up with the price of oil that fell, right? Sliding to current levels of $3.52. We were supposed to see $5. That was the expectation for the market, that we'd get $5 oil. That expectation didn't play out. So when expectations are not met, whether it's bearish or bullish, the market corrects in the other way. Are there other variables? Yes, there are other variables, but those variables are starting to look pretty good here. And one of those variables is actually interest rates. In Georgia and Mississippi, the average price of gasoline dropped below 3%. That's pretty explosive. Let's see, Texas, Louisiana, Alabama, South Carolina seeing average prices below 310. All right. California, probably the highest, obviously. I wonder why. That's an interesting study. Somebody let me know, why is California so high? California is at 530. So, that sucks. But hey, California is the richest state, so they're going to be paying a lot of taxes. They're probably paying for the war. Let's keep it real. All right. So, yeah. So gas prices are falling, $2.85 a gallon. So what does that do? Well, what that actually translates to is, for one, CPI is going to be lower, okay, going forward, especially if this breaks down. If oil runs sideways, that's fine. But oil prices are coming down, so the consumer won't be as constrained as they were. They're going to feel a lot better, especially a certain segment of consumer who is always having to pay gas prices, whether they travel a lot for work, or their work literally is transportation. So those transportation costs were the highest in core CPI, right? Core CPI. I know the argument. Oh well, core is going to be elevated. Actually, you know what? Let's just get to those actual figures. Core is going to be elevated, and core has been carried by transportation costs. Okay, transportation costs, but that is actually coming down. No, not yet. Sorry. Do we have any comments here? I'm going to get through this. 250 here a gallon. Where you at, Jet Hita? My mentor never taught me this stuff, and you're giving us for free. Yeah, it's free information. I'm going to charge you with, take my, you know what I charge? Listen and learn. Just learn. I was a teacher. Just learn. That's what I get out of it. I hope you learn, build a better community, get smarter, use your head, think for yourself. Anyways, let's get into it. So, this is CPI. Okay. This looks kind of dumb on YouTube. Let me expand it a little bit. Okay. Cause we're going to go through all the inflation data here. Real GDP, blah, blah, blah. Okay. So let's actually start with wage inflation. Okay. You hear a lot of people online saying that wages are going higher. The UAW strikes definitely put some pressure on wages, but for the most part, the actual wage growth is not moving up. This is it. US wages. This is the United States. Okay. We are talking US. So if you're in another country, just know we're talking about the US, right? But the US is the best place to invest. Unless it's crypto, because I think crypto is going to take off. But United States wage growth in salaries, right? That has been decelerating. It peaked way back in, what is this, February of 2022. So wages are coming down. Okay, look at that. This is the chart. Is it dropping like a rock? No. Some people say, I need it to drop like a rock. It doesn't matter what you need. It matters how the market reacts. Mr. Market. The market is unpredictable. Where is positioning? How are people thinking about going forward? What are the expectations going forward, right? So that's not happening. Okay, what about average hourly earnings? This is another measurement of wage inflation, okay, that the Fed is so worried about, which I think they paused so they know, hey, this information is getting better. The data is actually improving for us. And what we see here, let's see if we can I zoom in? Oh man, I can't zoom in. Well, what we get is average, no way. So it zoomed in, reset the zoom. So those are coming down, right? This is employment cost index, the employment cost index. So basically you take all of the company, a lot of the companies, right, in the economy, how much are they paying to employ people? Well, that's coming down. That's been coming down. So the direction is lower. The direction is an easing of conditions. The direction is, oh, we're not going to blow up. We're not overheating. The engine, the economic engine is not overheating. Okay. And you want this higher than inflation. It's at 4 point something. Oh my God, that's so high. Well, you still want it higher than inflation, right? You still want to be earning more than inflation. Well, I don't earn more than inflation rate. Well, get a better job, okay? Stop complaining, invest in the market. That's the only way to beat inflation, really. You can't hold US dollars. That's preserving your wealth. Not really, because they're going to get debased by the currency. They're going to get debased by the Fed, right? They're going to get debased by the currency. The printing is coming. They're going to keep printing. They're going to keep, so you got to invest in a vehicle that can outpace the money printing, okay? Second part, average hourly earnings, those are falling. So people are earning less per hour. Oh my God, that's terrible. Well, I mean, it spiked, it came down. This was recessionary. Now it's back up. So you're not getting that inflation actually happen. Okay. Now this is in my way. Let me move this so I can see the chart. Here we go. Okay. And I will do Q&A after this. So if you guys have comments, just stay tuned and then we'll get to Q&A. We'll get to the Q&A. Yeah. Let's see. All right, cool. So consumer price index, right? This is the main headline index that everybody looks at, CPI. There's three ways, this is core in yellow, and then I'm gonna take this off. It's the same thing. So if we take core off, this is headline. Remember, headline includes energy prices. So those were really falling. Headline was actually set to go to 2%. Headline was headed for 2% until we got the big spike in oil from, where did oil go from? We went from like 70, no, we actually went from 66 all the way to 90. So we had a big run in oil, and obviously that impacted CPI. So CPI went from 3 to 3.7. Okay, the last two prints, and just check this out. In about 7 days, no, not 7, sorry, 9 days, we have the next CPI report, okay? So this is headline. There's core inflation and there's headline inflation. The Fed doesn't even look at those. So this is what everybody cries about, or this is what everybody focuses on, but the Fed's looking at PCE. Either way, you still want to look at the data because we want to see all the data. If you don't really care, well, then you're not interested in this type of content. This is giving you the details. The devil's in the details, okay? So it's been going sideways, right? Now, you tell me, if this bounce went from 3 to 3.7, while oil jumped from 60 to 93, but now oil's down 10%, where do you think, which way do you think it's going to drag headline on November 14th? Which way do you think it's going to go? Use your own head. I'm not going to tell you what I think. Actually, I will probably eventually, but just think about it yourself, okay? Now, core takes out energy, but it kind of still does have energy because transportation costs go into core. So, well, transportation costs are coming down. We just saw gasoline on average is falling everywhere. In some states, it's down under 3%. So where do you think that's going to happen? November 14th, where do you think inflation is headed, right? The measurements that we see on the headline, do you think they're going to go higher? Is it re-accelerating? We're not even seeing on the charts re-accelerating. So all you guys in there, and if you do say that, oh, well, inflation is re-accelerating, bruh, show me where. Where is it re-accelerating? Please, not in your head, not your delusion. Are you going to manifest it? It's not going up anywhere. Oh, well, you're going to point out an exception? Some little town in Arkansas went up to 5.8. Bro, we're talking about the macro. This is macroeconomics. This is what the market cares about, not your little, right? If a pin drops and nobody hears it, nobody cares, right? It didn't happen. So it happened, but no, it really doesn't matter. It doesn't push the boat. It doesn't, a rising tide moves all boats. So where's the rising tide? Well, in this case, the tide is falling for inflation. And so the market's going to like this, right? All right. So that is consumer price. Now let's go to shelter. This is really hurting people. I know they say, prices are up. Here's one thing you got to learn about inflation, or you want to think about. Inflation is not prices going higher. It's the rate of change of prices going higher. It's how fast they're going higher, right? So if prices go from $10 to $11 on a month over month basis, that's a 10% inflation rate. But if it goes from 11 to $11.50, well, your inflation rate came down, but the price is still higher. So prices always go higher. And people say, well, inflation is always higher. Well, so are your wages over time. You're going to get paid more. Inflation is partly why the economy grows in the first place, because we debase the currency. We create debt. We print money to get GDP to go. This is the system we live in. You're not going to get away from it. So the point is, it is the rate of inflation, right? You want your assets to outperform. You want the vehicle to outpace the rate of inflation. Now, shelter is still elevated here, but it is pointing lower. And this has a lag. That means the lag is going to continue to fall. Well, what could lead shelter, right? What could lead this? How about Zillow real-time rents? Zillow real-time rents are telling us that shelter is headed much lower. And look, shelter Zillow rents actually exploded way higher than shelter CPI. So now they're much lower. So we should see this roll over all the way till 2024 where actually the shadow QE runs out. So I'm thinking somewhere in mid 2024. Don't let me get ahead of my skis here. I'm going to get a little ahead of myself. If we see a recession, it's going to be somewhere in Q2 of 2024. That's my guess. Okay, we don't know for sure. That's my guess based off all the data. So inflation's coming down. That is not the culprit here. Inflation is not showing up anywhere. I think there's more chance of a downside recessionary scare than there is actually a reflation, right? Reignition of inflation. It just doesn't show me where. If you think so, show me the data, right? How about personal consumption? This is what the Fed actually looks at. Okay. It's called PCE, personal consumption expenditure. It's a bunch of nerdy terminology that just really means this is what the Fed is using. This is what the Fed looks at. All right. Let's zoom in here. Where are we at? Okay. Let's first look at headline before core. Headline, same thing. Headline is at what? 3.44. Oh, wow. 3.44. And does that look like inflation is reaccelerating for the Fed? No, it doesn't. Ron W. Harris, how do you bank problems play into it? I don't know what you're asking me, bro. How do you bank? Are you talking about like where do I bank at? I know there's a bunch of stuff out there that says banks are collapsing. Banks collapse all the time. The FDIC insures 250K. There's a bunch of fear pouring out there. 250,000 the FDIC insures. So if you have more than that, yeah, you're in trouble. But the FDIC insures your deposits. You're not going to lose your deposits. Oh, the unrealized losses because of the bond market. We'll get to that. Keep your jump on YouTube, link in the description, and get your comments on there so I can come back to them because I'm just doing a presentation on inflation, right? I will do Q&A. We're going to go over that, but I just want to prove to the people the main thing here is if you believe inflation is a problem, that's totally fine. Just look at the data here, okay? So personal consumption, it is not going higher. I'll get to the rest of the stuff. Core, okay, their core is at 3.6. This one's actually higher for them. But again, if oil prices are falling, if GDP is set in the fourth quarter to come down from the third quarter, well, it's not consumption going up. It's not energy prices going up. As a matter of fact, let's break these down on another data point. Okay, let's break these down. This is trading economics, right? This has a really good calendar. If you jump on the calendar here, you can look at everything. You can break it down by market GDP. I am sponsored. No, I'm just kidding. I'm not sponsored. I don't get paid for this. I don't get paid for this. I do it because I enjoy it. Okay, I enjoy it to some degree. If I'm not here, I'm working out at the gym. So let's look at this. Energy inflation, right? It went negative. It is starting to come positive, but it's still negative. It's still down. So energy inflation, non-existent. Okay, this is one way to look at it. How about food inflation? I know your food prices are up, bro. Your food price, I get it. Your food prices are up. It's expensive. That's why you invest. The world does not owe you an explanation. This is not socialism. The United States is so powerful. The United States gives you opportunity to make money, to start businesses because you can fail. It does not promise that your wages are going to be outpacing inflation. It doesn't promise that food prices will always stay lower. You have to make more money. You have to get better or don't complain, period. So food inflation is coming down, even though your prices are still high, obviously, right? And different components are higher than other components. So this is at 3.7. This is, it's coming down. The point is, it is not re-accelerating. That's my point. Inflation is not re-accelerating here, right? How about services inflation? You hear this is going up. Well, guess what? We saw, and we're going to go over that services are not actually going up. Prices paid for the ISM, that's good, boring information, geeky stuff. But services inflation is also coming down. Not super fast. But the service economy is 70% of the economy. So do you want it to collapse? That means service growth falls. That means we head faster into recession. But if you're cheering for recession, well, you're probably you don't have any stock. You don't have any crypto. You're not positioned. That's probably why you're cheering for that. That's totally fine. Good luck. But inflation is not reaccelerating, and it's not falling like a rock either, which is a great scenario. How about rent inflation coming down? I mean, we kind of looked at Zillow, right? We kind of looked at the Zillow stuff. Now let's go into the super core. Where's the super core at? Super core prices. Is it core price? Are these individual core prices? No. 5-year forward expectations. No, we're looking for super core inflation. Here it is. Excluding houses. So this is services X housing, right? Because services are kind of strong because of housing, because of the real estate market. But if you take that off, you remove housing On a year-over-year basis, we're at 2.7. This is pretty good. This is why the Fed is pausing. This is why the Fed is done hiking. The Fed is done hiking. I'm going to call that out. I'm going to take that guess because we're not seeing oil spike, which they don't care about anyway, and we're not seeing consumption move higher, right? The Santa Claus rally, there is growth. There is earnings growth. Amazon, Apple, Google, Facebook, except for Tesla, NVIDIA, they're all crushing earnings. Their top line revenue is not great, but they're still producing more earnings. This is financial engineering. They're performing. They're able to grow earnings per share for their investors despite growth coming down. So growth is not negative yet, so chill out. We're not negative in growth. Either way, inflation is not the issue. It's down. It's down. So you're not going to find it. You're just not going to find it. How about vehicles, right? Vehicles, used car vehicles are 1/3 of inflation is used car vehicles, right? Vehicles in general. Does that look like it's reaccelerating? I mean, maybe if your eyes are cocked backwards, I don't know, or upside down or reverse, but no, it's not. It's not happening. It's not happening. So we're seeing inflation come down on all areas. And the biggest culprit here was actually oil prices. And we're not seeing oil prices actually reaccelerate. They're at 80. So this next inflation print should be pretty juicy. It should be pretty juicy. Okay. So that's inflation for you. I mean, there's other measurements, but that's what we're seeing with inflation. It's not reaccelerating. There is no, now here's the issue right here. The ISM manufacturing indicators, right? These basically show forward growth for the services and manufacturing economy. Those are easing. Those are coming back down. This is the 50 bound, right? This little 50 mark. Under that's contraction, so the economy is slowing or going into recession if it crosses, lower than it was. And that's blue, that's manufacturing. But in red, services are still above. Services are still up there. Okay, so you're not seeing inflation pressures because growth is actually coming down for the fourth quarter. So maybe you get a recession next year. Sure, possibly. I don't think this year because it's seasonality, right? Seasonal jobs. Maybe they're part-time, but you're still going to get spending. Seasonality. A lot of rich people are getting that dividend income and they're spending it. So inflation is not reaccelerating anywhere. Are we ready for the Santa Claus rally? I would say that we got the first, we got the first leg to that. We did get the first leg to that. What up, YouTube? Chainlink to 100. Oh yeah, what up, Underground Economist? Yeah, 100%. Chainlink to 100. Does the Fed use lagged data indicators? Yes, they do. They've actually talked about using more recent indicators. I heard anyways. Who knows, right? Who really knows, the Fed? But I hear that they're trying to put in real rents. If that's the case, inflation is lower. As a matter of fact, let's look at Trueflation. Let's go to you can go to Twitter. Go to Twitter or X. My bad. It's hard to say Twitter now. X, and go to Trueflation. Okay, this is actually like 10 million data points. Every single day it's tracking and giving you feedback. Where are we at? Ooh, is this UK? Oh, this is aggregate. So since 2020, the UK is up 32%. They're getting smashed. Europe's getting smashed. So here's real-time inflation. If you were to use blockchain technology, which is going to be coming into play, which is why we are so bullish on crypto, because blockchain is set to grow faster than AI. And guess what? You can actually have exposure to it. To get exposure to AI, you have to buy Microsoft. It's already a $2 trillion company, right? You have to get NVIDIA $1 trillion. But here in crypto land, most are scams. You have exposure to blockchain technology. So here's part of what blockchain does. Trueflation takes 10 million data points, gives you real-time feedback of what's happening. In real-time, inflation's at 2.2. That's the Fed's target, right? 2%. Oh, but it's not at 2%. Well, look, if you actually look historically, where did I put that chart? If you actually look historically, do I have it on here? I have it somewhere. I'm going to pull it up. Historic inflation. It was Tom Lee actually introduced it. If you use historic measurements of core inflation, the historic this historic average is actually 2.8%. Where is it? Tom Lee. Let's see. I'm going to find it here. Give me a second. We're actually at 2.8%. Where is it? Where is it? Where is it? Where is it? Come on, come on, come on. This is a really good, oh, there it is. It's hiding. Okay, here we go. Here we go. Just burn this into your memory. Okay. Historically, since 1982, the average is actually, and this is core CPI, 2.8%, not 2. So the Fed is really tricking you, right? They're using lagging data and they're actually averaging something that is not even in reality. Now, I'm not saying 2% doesn't make sense. I'm just saying in general, if you look at the history and data, are they really like, we're going to crush the economy, get to 2%? And part of their mandate is employment, maximum employment. We're getting that. As a matter of fact, it's actually easing. Employment kind of rolled over. Jobs are coming down. They're not negative yet, but the unemployment rate's at 3.9. So they're paused. This is very historically bullish for the market, not bearish. And this is part of the Santa Claus rally. Oil is down. Rents have been coming down in New Mexico. Yeah, rents are coming down in Phoenix also. They're coming down. Rents are coming down. Is there a global ISM chart? Is there a global ISM chart? I think there is. Trigger Media. I'm pretty sure there's a global PMI. I'll look into it. Global ISM is good metric for crypto. Yes, global ISM. And either way, crypto right now has other catalysts than just liquidity. So it has like 2 or 3 catalysts. Number one, the Bitcoin ETF. That's huge. Number two, tokenization of all real world assets. That's happening now. Citibank's already tokenized their deposits. That's happening now. That's a huge, I mean, that's cutting your efficiencies. What is that? CBDs, central bank digital currencies. Central bank digital currencies. What do they do? Everybody's so, oh, they're going to destroy PayPal. They're going to destroy the Squares and the Robinhoods if they don't innovate faster, because what do? They actually improve payment efficiencies and accessibility. They enhance more, they give you more inclusion because your phone can be connected. Like if you're homeless, right? You have a phone, they're going to give out free phones. This is just a theory. And everybody has a connection to CBDCs, right? Central bank digital currencies. Increase security and transparency. Well, it's more transparent. Cost reduction. It's going to be cheaper. So it's going to push out these other fintech companies. Not in every aspect, but it will take away their potential total addressable market, right? Monetary policy tool. They'll probably tax you right on, like they can tax you right away. So there's negatives and positives. The point is CBDCs are coming, and crypto tokenization is going to be part of that. They intermingle to some degree, interoperability. So yeah, that's well, let's get this off. That is the chart for inflation, and this is key right here. Oil prices are coming down. Oil prices are coming down. I'll look into the ISM to see if there's a global ISM number. We can look at those ISM numbers, but for the most part, they're still kind of recessionary. But that's the point. There's no sign of inflation here. There's only a sign that the economy is starting to slow, and that's going to be very bullish for the stock market. That's why we had a rip-roaring rally, and now we're looking at liquidity going forward. But there's some other issues in there. We'll get to the other issues. Let's see. Dollar is dead. Okay, Matt. I'm sorry, Matt. The dollar is not dead. And here's the main reason why, okay? The dollar is not dead. Compared to other assets, the dollar is still strong, right? The dollar is still very strong to other currencies. I'm sorry, it's very strong to other currencies. And part of that reason you're not going to get the dollar die anytime soon. I mean, honestly, I really can care less. I'm not tied to the dollar. The farther the dollar falls, the higher my crypto bags go. So I don't care if the dollar goes up. But the truth is 80% of debt is denominated in dollars. Okay? The dollar is the most transacted currency in the world, and that actually ticked up according to Swift data from the past like 6 to 12 months. People still want to transact in dollars despite the sanctions. Dollar demand actually went up during the sanctions. So the dollar is not really going anywhere. I hope it comes down though. I hope it just moves sideways in this big range. I don't want it to spike, but most of the world is denominated in dollars. So the thing is their debts are in dollars. So if you don't pay your debts, you actually make the dollar more scarce. They're going to default. Their economies default if they don't pay back the dollars. And if you don't pay back the dollars, well, you take dollars out of the market, the dollar goes higher. It actually strengthens. The only way to weaken the dollar is for the Fed to print more money, okay, cut rates faster than other central banks, and to print more money faster than other central banks. That's how you get the dollar lower. You can't just dump the dollar. It doesn't work that way. Maybe in the next 5 to 10 years. But the dollar's, I mean, I don't like the dollar as an investment. I'm trying to make 25 cents a day, $25 a day in the market. I mean, you got to be a pro trader. Wait, Jet Hita, 250 here for a gallon. Where are you? Where are you for 250 a gallon? You're seeing you're seeing gas prices at 250 a gallon. Where is that? I don't know where that's at. All right. So, anyways, back to it. What is the second part to the Santa Claus rally? Okay, getting back to the market. Look at this. I mean, this was a vicious, rip roaring rally. Very exaggerative language here, but I just want you to stick. Why did that happen? Because the expectations for inflation are not rising, and now yields have actually fallen. Right? We know oil is not really showing oil is not really the culprit here. It's not going up. It's not risk off. As a matter of fact, it looks more risk on. That eases consumers going into Q1, going into Q2. So the second part here is rates are actually coming down. The Fed is pretty much done. The Fed is done hiking rates for now. So why would they hike again? Maybe they could, but now the fear of breaking something is much higher. So they're not going to hike again. Are people losing? I think the bubble popped and the people said the bubble's going to pop. The bubble's going to pop. Well, what the hell was this? The bubble's going to pop. What the hell is this? This is literally US Treasuries on the long end. You're going to tell me the bubble didn't pop? This was the biggest sell-off in US bonds in history. Look at that. The bubble didn't pop. The bubble has to pop. What bubble? From 179 down to 83. So more than a 50% retracement in the bond market. That was the bubble popping. And that's why you had rates, 10-year just explode, because this was the bubble popping. Now, some people say it has to go all the way up here. Well, good luck. The U.S. won't even exist if that happens. Everything implodes at that point. It's not going to happen. The U.S. Treasury, the Fed, they're not going to allow rates to get so high that the whole economic system implodes. They're gonna come in and they're gonna debase the currency to pay off more debt. They're gonna push it down the road, basically. That's what you do. You push it down the road. Who gets hurt the most? People who are holding cash. People who are holding cash, who make less money, they get hurt the most. Who benefits the most? Asset holders. The best assets, the premium quality assets, they benefit the most. And these rates will not stay up here. The next liquidity cycle is coming. Oil should go up from what I put together from the news. We'll look at Ron Harris. Here's the thing. The U.S. is producing more oil at a record pace. The U.S.'s demand for oil is coming down, and we're the biggest consumers of oil. Iran actually increased oil. We eased sanctions on Venezuela, okay, so they can produce more oil. We eased sanctions on other countries so they can produce more oil. What else is it? Saudi Arabia has said we'll step in and produce more oil if we need to. So, no, I don't think so. The news, here's the thing about the news, Ron W. Harris, you got to know the news is like bullshit. I mean, I thought people would know this by now. The news feeds you stuff to get you excited, to get your anxiety up so that you can click more, right? The news is not going to tell you the supply of oil, the demand of oil, the dynamics. They're not going to give you the actual market IQ, what's going on in the market. They're not going to give you that. They're just going to tell you what you should believe. It's television programming, because television, they're trying to program you to believe something. They're not trying to mind control. Okay, maybe they are. But the point is, you got to look at the data yourself and use common sense and use logic and reasoning. I'm not saying oil can't spike. Obviously, if the war expands, which it's not happening right now, because the other Arab countries don't really want this war. They don't want the war. You're seeing highlights of different Arabs in different places rising up. That's a small minority of most Arabs. That is a very small minority. Okay, they're highlighting it to get you scared, to get you fearful, to get a reaction, because most of all, they're going to make more money the more clicks they get. But it doesn't mean most Arabs are actually up in arms. That is not the case. Most people just want it to end, right? How do you, okay, so unrealized losses. Yeah, banks are definitely falling because of those unrealized losses, but the Fed steps in. We already saw that information, that when the banking crisis happened, the Fed stepped in. Yeah, recession. The Fed took the recession off the table, 100%. How does a weakening dollar affect the market? The dollar is the cost of global trade, and it is also the denominator to all assets, pretty much. So when the dollar goes up, Okay, that means trade gets more expensive. That means you have less money in the system, less liquidity. But when the dollar comes down, markets typically go higher. Number one. Number two, for asset prices, when the dollar goes up, well, your denominator goes higher. If you're not familiar with math, I'm sorry, I don't know what to tell you. But when your denominator gets bigger, the numerator gets smaller. So if the dollar comes down, then asset prices go higher. It's really simple, but the details is where, there's a lot of details to it. Like, it doesn't always happen. Sometimes the dollar can move up and assets can also go up. It depends who you are, because every asset is going to react differently to the environment depending on exactly what's happening. But in general, in macro, lower dollar is risk on for asset prices, right? That means the tightening is pretty much over, and the dollar goes up, it tightens financial conditions. So yes, we are ready for the Santa Claus rally. I think that's what we're looking at. Now, we're probably going to get a pullback. Okay, so let's take a look here. We're probably going to get a pullback because we did just rip higher pretty quick. Okay, this is a very fast recovery for the S&P. And really, I just use the S&P as a proxy, but I'm looking at the Qs. I like the Qs even better because I think the future is technology, and little by little, technology takes over a bigger share of the market because everybody's going to be in technology, because that is literally that's how the world works. Technology becomes a bigger share of the market going forward. That's just how it works, right? That's why Apple, Amazon, Google, Facebook, Tesla, Meta, well, maybe not Tesla right now, but most of these companies that bring the biggest earnings growth are technology companies, because software is eating the world, because we're going into a digital age also, because you can create technologies that are more productive, more efficient, and produce more with less. That's why you don't have to go to the movies anymore, and you can watch Netflix for $14.99 instead of paying $60 to go to the movies with 4 people. So technology is deflationary, and they stand to gain the most gains. But not all of them, only the good ones. Only the good ones. That's why fundamentals tells you what to invest in. Technicals tell you when. And the macro tells you why. Why is this happening? Why, right? What is my prediction tomorrow? I don't do one-day predictions. If I had to do a prediction, I would say the S&P pulls back, because, I mean, we've had a very strong rally, like I said. Let's take a look at this, right? We came right back into this resistance. So I think we're going to come back and maybe fill one of these gaps, maybe 2. Let's see if I could throw those gaps on here. I think I have it on favorites, gaps. Here we go. Trading view gaps. There we go. So you got to, okay, so you have a gap down here. So we could have come back down 357.50 for Qs, fill the gap before we start to rip higher. Boom, boom, boom. That's what I think. For now, that could change, obviously. But yeah, we have some gaps to fill. Here's a gap here. We could come all the way back down here, fill this gap. That's not out of the picture. We definitely fill these gaps. Even going into the next inflation print, the market could sell off and say, oh my God, well, inflation is, we got to wait for the print. And then all of a sudden it's good. And then it starts going back up. That's the market psychology is wild. It's not predictable. It's based on if then, right? If then, if this, then that. And every day is a different if then. Every data point changes the trajectory and positioning. There's a lot of cash on the sideline, though. That's why I think we're definitely going higher, because the fears of inflation are dissipating. They're falling, and now it's going to go into recession. We're in an earnings recession, but right now earnings are still very positive. Oh, as a matter of fact, talk about earnings. Talk about earnings growth. Let's look at what's going on with earnings, actually. Pretty sure I posted this on my page. Yeah. All right. So earnings, I always retweet FactSet. Okay. So first we got S&P earnings growth year over year. S&P is reporting 3.7. Now look, the projection for S&P, this is all the sectors. This is why stocks always do pretty good in all environments. Right? When the stock market dropped, you had energy really go higher because inflation. So stocks are more like, they're very diversified. Stocks are diverse. I don't like being diversified myself because I'm trying to make the most gains because I have a specific strategy, but the stock market can survive in anything. Right? And my point here is the projection was negative 0.3% earnings growth. And as of now, how many stocks have reported? How many companies report? I think a little over 50% have reported. We're positive 3.7% earnings growth year over year. We haven't been positive since 2022 from a year ago. So we're leaving the earnings recession. Now, the downside, well, let's not get to the downside. First, the upside, earnings growth, EPS, 82% of companies are beating EPS estimates. Market psychology, it's all about estimates. If you beat estimates, then you're going to do better if your guidance is also not negative or positive, depending where the stock price is, right? So good news is good news, but it's even better when stocks are down a lot. When stocks are up a lot, that good news doesn't give you as much of a boost because you're already up. It's more risky. It's less risky when you're hands off in cash, and then all of a sudden you're like, oh, the news is better than I thought. Boom, there goes the bids. Now here's the downside right now. Here's what's weighing us down, which is why I think we're closer to a recession. I don't even think we get in a recession, to be honest with you. Maybe a light, medium recession, and then boom, here comes politicians with more stimulus checks. 62% of companies have beaten revenue estimates. So revenue is actually lower. It's lower than the 5-year average, and it's lower than the 10-year average. So revenue is lower, less revenue in the market, but EPS is still doing well. So it's a stock picker's market. Some stocks are just going to suck. Some stocks are still going to suck. And you asked about Russell. What about the Russell 2000? They actually had the biggest update, I think, of the year, Tigger Media. We'll do for Q4. To be honest with you, it could do well. I don't know about the Russell because I know the Russell just had a really good performance and a lot of people bought calls on the Russell. Let's look if they have any gaps. And by the way, the ticker for the Russell 2000, which are small caps, basically, companies who are not positive yet, they have more opportunity. I still don't think the Russell outperform. Man, that was a big upside move. Sorry, this phone is in the way. That's why I can't see that well. So the Russell grinded from the lows up 7-8%. The Russell outperformed NASDAQ and S&P and the Dow this last week. So what does that tell you? You hear, well, the Russell's down so much, and that's a recessionary, and I'm being facetious here. That's a recessionary, I don't even know if I use the right term. That's a recessionary signal. Well, why the hell did it pop 8%? Because this is not the same market. Markets change. If it was that easy to tell how things were going forward, everybody would be making money. Everybody would be beating the S&P, but they're not because markets change. They don't do the same thing they used to. And I think really it's just there's a whole lot of cash on the sideline. So the Russell suffers the most because when you take cash out of the market, you're going to take it out of the riskier stocks. So we just got risk on. The Russell is actually now showing big risk on over the past 5 days. What changed? The Fed paused. What changed? Well, the Fed paused. What changed? Rates came down. And the Russell is most sensitive to long rates. And here's your long rates. Let's go to the 10-year bond. Collapsed. We called this out, by the way. Is it over? I don't know. Maybe it moves sideways in a range. Maybe we get it move. Bro, damn it. Maybe we get it move like this. Okay, sideways. Either way, that's okay because it's rates are more predictable. If they keep falling, well, we're gonna have a face ripping rally. I think maybe 3 or 4 days the market might pull back because we were up so much. But then if rates keep falling, that means the dollar comes down because the dollar is being driven by higher rates. And look, the dollar is now breaking that support. That's weird. Why is the dollar breaking support after rates fell? Because it's been driven by rates. So if rates come down, I'm talking about bond rates, dollar comes down, oil's not a problem, the market keeps going higher. It's going to come back though, right? I'm not doing day trade predictions. That's silliness. You got to be in real time for that. I'm talking macro. Sentiment, positioning, catalysts. Those negative catalysts are starting to evaporate. And when it does evaporate, there's usually a really knee-jerk reaction. It's not really fast. Now, if rates just slowly come down, I think that's the best case scenario because the market can digest that. If they come down too fast, the market might think, oh my gosh, growth is collapsing, right? So that's a possibility also. So you want those to grind down higher. So for Q4, I would say this, Tigger Media, if rates come down, the faster rates come down, the better the Russell performs. Because, they're riskier assets, right? and the most risky of assets are, now this is a bearish pattern, but boy, is crypto moving. Oh, I got this thing mixed up. It's not this. It's not is. I'm gonna have to actually move to crypto. Let's go to this one. Bitcoin ripping higher. You got Bitcoin ripping higher. Okay, we've talked about this. Bitcoin's gonna move eventually, right? Because Bitcoin, I believe, is sniffing out the return of liquidity. It's sniffing out lower rates, China printing, Taiwan printing, Japan printing, yield curve control. The US is going to have to print more in 2024, more fiscal checks. Risk assets move first. They also sell off first. This is why Bitcoin peaked in 2021 when the Fed actually came out and said, this was April of 2021. They peaked, actually peaked kind of there. I mean, it kind of peaked here, but riskier assets like ARK Innovation and a lot of altcoins, they peaked first because the ISM had peaked. What is the ISM? Well, it's forward-looking growth. Forward-looking growth actually stopped going up. So when forward-looking growth looks better, or there's a chance of liquidity coming in, this was the chance that liquidity would leave the market because inflation got above 3.5%. And that signals, oh my God, in the future, the Fed's going to have to tighten, boom, sell off, right? And then it came back up and the Fed was like, yeah, we are going to tighten, boom, sold off again. So this time it's like, oh, well, the Fed's going to have to ease, and they're starting to ease, and maybe they even cut rates in 2024, which is possible because we see CPI is actually coming down. And if oil comes down, then you're going to get CPI come down even faster, probably headline in the twos by December. By January, February, you might even get core in the twos. And the Fed's target gets hit. This is the bull case. The Fed's target gets hit even quicker, and all that cash on the sideline. You have a record of cash on the sideline here. Okay, you have a record cash on the sideline. I think I have that slide. Where is it? A record. And here's global liquidity. Global liquidity, you guys can't see this on TikTok because it's on my software, but global liquidity is climbing at the same time. This is what crypto wants to see. And this is why we have Ethereum really trying to break out here. Okay, Ethereum probably outperforms Bitcoin. And Chainlink, the favorite, is my favorite pick here. I mean, we bought this at 5 if you were with us. We said, hey, we're long Chainlink, made an episode on it. $5. From that point, it's up 100. What's up? 100 and something percent, 140%. And I think it runs. If inflation comes down November 14th, this is the bull case, obviously, and liquidity keeps picking up and the Fed is done and rates come down, the dollar comes down, Chainlink's going to be at 16. 15, 16 pretty quick. It moves quickly. What is it? Why would that happen? Because the entire financial banking system is moving on the blockchain. Not on Bitcoin's blockchain, not on Ethereum's blockchain. They're creating their own private blockchains. And for that system to work, they need a connector, a link, Chainlink. They need a link to connect to each other to transact. And they need that link to be secure. And they need that link to confirm and validate the truth between chains. That is Chainlink. That is Chainlink. And guess what? They have a deal with Swift. They're working with DTCC. They're working with Citibank. They're working with Hong Kong to do the digital dollar. They have the most, by far, best fundamentals. Not only they're the most used, the biggest use case in crypto, but they have the most upside, the biggest total addressable market in my view, other than Bitcoin and Ethereum. I'm not going to compete with them. But Chainlink has the most actual news that people are working with them. Not XRP. You haven't seen one article that a bank is using XRP. Okay, Visa's using Solana. And I think Solana goes much higher. I'm just going to call it Solana because it's funny. But, you know, it's going to climb. Chainlink should be climbing here. They're going to probably benefit, I think, the most into this crypto cycle. Probably gets extremely over exaggerated and then comes back down. Russells are the cryptos of stock market. Is the Russell the crypto of stock markets? There's some individual stocks that you could say are the crypto of stock market. Yeah, for sure. But the Russell as an index, does it move kind of like the crypto market? I mean, the crypto market is just pulled by Bitcoin so much. I don't know if you can compare it, because from the bottom, the overall crypto market went up 2,000%. The Russell did not do that. So I don't know about the Russell, but there's individual companies in the Russell who you could say they're higher vol assets. They're higher beta assets. They move faster. They're more sensitive to interest rates. So yeah, IWM's it's gonna outpace. I don't know if it beats Nasdaq though. It could. It probably will. But Nasdaq has real strong fundamentals, margins, earnings, all that stuff, and the top companies are just getting better. Um. All right. Let's see what we got over here. You think there will be ETH ETF? Yeah. Oh yeah. Yeah. There'll be a ETH. There'll be a ETH ETF eventually. I don't know when, but there will be one. All right, okay. Got some crybabies here on TikTok. You're not answering your messages. Yeah, you guys come in kind of late. Also, I always say go on YouTube so I can see your messages. I can't really see your messages on TikTok unless I just look at them, right? So I got to appeal to both audiences. I wish I could see them both in the chat, but TikTok doesn't have the capabilities to to convert them in there. So stay patient. I'm gonna get to your comments. So let me just run through these TikTok comments. How does weakening dollar affect market? Already went through that. How are we ready for the Santa Claus rally? Yeah, we just explained that. Santa Claus rally happens every 4 years, right? No. Santa Claus. Sergio. You're thinking of the crypto cycle. That's every 4 years. Santa Claus rally is just seasonality because mutual funds. They're a $32 trillion industry, and mutual funds. They stop tax loss harvesting in October. So seasonally, October, November, December are the best. It's a fourth quarter. It usually performs the best in all markets, and so it's just seasonality, right? But no, it's not every 4 years. That's more the crypto cycle, which is really tied to the liquidity cycle. What is your prediction tomorrow? I'm not doing tomorrow predictions. We probably pull back at some point over the next couple of days in the S&P. Maybe crypto might pull back. It might go higher. I don't know. SPY tomorrow, up or down? I don't do those. Correct. I'm from Egypt, and I agree. SPY up or down tomorrow? Dang, bro, you guys want listen. You guys want these predictions up or down tomorrow? That is stupid. I'm just gonna tell you straight up. That is the dumbest question. Okay, I'm just telling. It's stupid. I would have to be. You can't predict the SPY up or down tomorrow. You cannot do that. There has to be a very distinctive data point. There has to be a very distinctive data point, and you still can't guess how the SPY is gonna react. So no, I don't do days. And I'm not mad. That's just how I respond. But yeah, if you ask SPY up or down tomorrow, it's just a low IQ question. Ask me something. I mean, I don't know. Usually those people who want a prediction on the market tomorrow, they're losing money because they want somebody to tell them where they should bet tomorrow. You're just gambling at that point. Good luck. If you like gambling, cool. Right? That's fine. But most people don't like losing money. QQQ gap 357.50. Yeah, that's about right. We not in recession. Yeah, we're not. Weak chart. Where's your fib? No, it don't. Who's this? Eric Sa? Where's your fib? Okay. I took the fib off. I don't have the fib on. NAS has the highest ATR. NAS. I don't even know what you're talking about. NAS. Sounds like a crypto enthusiast. $5 every day trading crypto with $200. No. Follow backer. No, you're going to lose money trying to trade, day trade. Day trading is not smart, period. Day trading, you're going to lose money. Most people lose money in day trading. You might be good for a couple days, a couple weeks, and then the market changes on you and then you lose money. It's way easier to invest, honestly, or to swing trade, but really investing is your easiest, right? Look at the seasonality, look at the cycle. That's your best bet, not day trading. You're going to lose. I know people like to day trade because it's quick and it's easy. It's like, oh, I can gamble. I don't have to go through. Listen, here's what people don't understand. You're competing, trading, or the market is the only game where professionals compete with novices, right? Professionals can compete with beginners. You're going to get destroyed. You're going to get destroyed. And if you make money, you don't know why you made it or how, you're going to lose money because you don't even know how you did it. Most of the time, people just get lucky. It's dumb. I'm just going to cut it straight for you. That is stupid to bet on short-term trade. You got to go through years of experience and actual practice to learn how, and you have to actually make it. It's a performance sport. Trading is one of the hardest professions in the world. Most people fail at it. There is no college degree. There is no way to just do it. It's harder than real estate. But dang, the people who make it, they're good. And guess what? They can lose all their money pretty quickly also because the market changes. So you have to keep track of the macroeconomics and how the market is changing. It's evolving all the time, right? So no, I'm not going to give I'm not going to tell anybody day trading is a good idea. It's not. It's really not a good idea. It's something really hard. Can you check Dow Jones index? The Dow Jones. Dow Jones is all right, man. Dow Jones is all right. I'm not a big fan of the Dow. I think McDonald's is doing pretty well. I think for futures, right? Some of you guys that are futures traders are looking at the Dow. Look, here's what I'd say. You know who's gonna, I think, benefit the most in the Santa Claus rally from the Dow? Caterpillar. Look at this capitulation. Okay, Caterpillar is in a nice upside trend. It is an industrial stock, meaning it's going to benefit from the fiscal policy coming from the White House, which puts $1.2 trillion of infrastructure. Caterpillar is a builder, right? It's an industrial, so it's going to benefit. Look at this big capitulation candle also, right? The buyer stepped in on this big flush lower. Did they just have earnings? That was on earnings. So I think Caterpillar is going to be a good pick. Same thing with Deere. I don't really like the airlines or like Lockheed Martin. I think they don't really move. But Deere has made a big move. UPS, I don't know about UPS. Maybe, maybe not. It doesn't look that good. Looks like it could bounce there. It's a little oversold. But I definitely like CAT. Okay, so Dow though, I'm sorry, but the Dow Jones, I mean, it's just the Dow Jones. It just doesn't really go anywhere. I don't even know if you're still on here. You can ask me a more specific question. Got to start. Oh. This guy said, got to start replying to your comments. Bye. Okay, bye. Bye. How about Amazon stock? Hey, Amazon looks good. Amazon looks really good. And Amazon probably has one of the best business models in the game. PEs are coming down. Forward PE is lower. Tigger Media missed that. See, it's hard to keep up with all these comments. What's your opinion of the most quality assets? The most quality assets. The most quality assets are going to have a combination. I have this on my Twitter. The most quality assets are going to be a combination. See if I can find it up here. I think I have it in the highlights. A combination of, here we go, pure revenue growth. So they have product, they have demand for the product. Okay, and I'll tell you the actual stocks, but most people don't want the education. They just want to tell me what to buy. So pricing power, right? They have pricing power. They can move their prices up or down. Chipotle can do that. They have demand. People actually want to buy it. They increased efficiencies and margin retention. They're using AI to cut costs, or they're just cutting costs they don't need. They're very innovative. They have low debt, so they're not getting impacted by the rate hikes, which is going forward, which is most of the big tech companies. They have big cash flows. Apple has $161 billion of cash. If they park that in the money market funds, they're getting 5% on it. Are you kidding me? So they can actually benefit from higher rates. They're doing share buybacks, right? These aren't always good, but this increases their EPS and creates more scarcity. And scarcity is what makes markets go higher. More demand, less supply. They're removing supply. Debt funding, me and market fund, we kind of talked about that. They can fund themselves with the money market funds. They're a disruptive innovation to some degree. Apple's not really disruptive anymore, but their services, they're kind of disrupting other services, right? They're disrupting music. They want to get into electric vehicles, but that's really risky. They're disrupting a lot of things. I'm not a big Apple advocate. I like Tesla better. I even like AMD better. I like Zoom. I know Zoom is down a lot, but I like Zoom better. So quality assets, it depends in the actual environment you're in. So in this environment that we're in right now, we're basically teetering with recession, but over the next 6 to 12 months, you're going to get more liquidity. Rates are done. So when the liquidity cycle, which is the speed of the economy, the speed of assets, when the liquidity cycle starts to turn back to quantitative easing, the most quality asset is Bitcoin. That is the most quality asset. It cannot be debased. It's going to swallow everything else. So I think it depends on the setup. Is it risky? Sure, it's a risk asset, but so was Apple, Amazon, Google back in the day. But guess what was happening back in the day? There was more demand for technology, so they exploded. So to me, quality depends on the environment, the demographics. Are more people adopting Bitcoin, crypto? What are the demographics, right? What is the central banks doing? So it depends on the environment. But quality assets also, I'm just trying to think this through. People say treasuries are pretty quality. They're more defensive. They're like a tank. they're slow, but they're not going to get, you're not going to get blown up, even though this was the biggest blow up in history. So treasuries will be going higher eventually, but the Fed still needs to cut rates and they still need to start putting money back on the balance sheet. So bonds have large inflows. I don't know. I think it's Bitcoin. And I'm just going to say it, Bitcoin will outperform NASDAQ and S&P and IWM. It's going to outperform, especially with that Bitcoin ETF. So quality depends on the environment, the pathway going forward. And even that is hard because people will tell you quality is gold, quality is this. But if the environment doesn't favor that asset, it's not quality anymore. It's just not quality anymore. And also big tech. I mean, honestly, Google, Amazon, Microsoft, those are high quality. Who is it? Technology is really where the quality is at in my opinion. I think Google is set up really good. Meta set up really good. They have freaking half the world on the platform every day. They have a lot of advantages. Netflix, I'm not a big fan of. I think they're getting disrupted, but it'll probably move up still. They're still doing pretty well. Nvidia is probably going to break out to all-time highs on the next earnings report. You said that looks bull trappy. It looks bull trappy. Okay. Scooby Dooby, what up? If BTC is in a bearish pattern, what could change to look bullish? Good question for you Bitcoin bulls. So you want to see, let me see, I have this marked up. Why is it not showing it? This is the market cap. Let me go to crypto really quick. So what you want to see here, because this isn't really that healthy, to be honest with you, for Bitcoin, but altcoins can keep going. The RSI is coming down. The buying pressure is up here. So what I would want to see, now I am not getting into Bitcoin because I'm not advocating go buy Bitcoin. I'm not. I am buying Chainlink. I'm getting long Chainlink because I think it has more upside, but I'm also I have a lot more experience. So it's not the same for you. But for Bitcoin, what I want to see, what I would want to see on Bitcoin to look healthier is for it to actually break down, possibly go test this moving average, which it really doesn't have to, but come back down to 33, 32, maybe even 31, and then form a bigger wedge. But honestly, I don't know if it does that. It might just explode right back up. I think it breaks down a little bit. Like just looking at the price action, I think it's going to break down here. Let me try to make this a little easier to see. Okay, so I think what it might do, because we're going to need a pullback, maybe rates go up a little bit, dollar goes up a little bit tomorrow before it really gets finished off. Possibly Bitcoin breaks down and retests somewhere around here. Okay, maybe 33, and then comes back up slowly. So it might just do something like this. Right? You always want to get it on a pullback though. I know people do breakouts, but breakouts don't always get the pullback. When you're in an uptrend, you want to get the pullback. You want to get a nasty rip lower. So I would expect Bitcoin to come down maybe 33, 34. I mean, it's kind of at 34 right now, but 32. There's a lot of scenarios. The other scenario is it just keeps doing this. And then it just breaks straight up. That could happen too. With this much demand, Bitcoin could also just run right back up to the top of the trend and go to like 42,000. Like literally, it's a monster. It is a monster. So this comes down to how you scale yourself in. Let's say I had 0 Bitcoin and I wanted to get some Bitcoin. I'd probably buy now, but I would buy like a third, and then I'd wait for it to drop by another third and see what happens, and then buy another third to get all the way in. Or buy a third here, it goes up. Oh no, comes back down, buys a third, or it breaks out and I just don't get more in because it just went up too quick. Anyways, that's just my 2 cents on that. Small caps lead when rates decline because they are dependent on future earnings. 100% Scooby Dooby. It's bearish until it breaks 70K. I think he's talking about Bitcoin's bearish until, okay. If you're talking about Bitcoin, I mean, you're one of those guys that says you're in a bear market till you hit all-time highs. Cool. You're just missing all the opportunity, right? If you're going to get invested in something, do you want to buy it when it's up here? or do you want to buy it when it's down here? Like, this is the funny thing about people psychology. Investing is the only game, or the only, I guess, business where people want to buy when things get more expensive and sell when they get less expensive. When they go down in price, people sell and they buy at the top. That makes no sense to me. Maybe it makes sense to you, but it's just not common sense, right? That's how you lose the most money. A bear market is down 20%. For crypto, that's different. It's like 80% because crypto, crypto's like a rocket. It explodes. It's explosive, but when it crashes hard. So is it bearish until 70K? I mean, if you were to go back to, and you might be right, maybe that makes sense to your mind, but do you want to buy in a bull market or a bear market? You make the most money buying in a bear market. So yeah, I wouldn't say it's bearish. Also because it's making higher lows. So here's a technical analysis for you guys. When an asset starts to trend higher, so look, higher low, meaning the lows, the pullback is higher than the previous pullback, higher low, and you're getting higher highs, right? Higher high, higher high, higher high, high. It's not bearish. That is an uptrend. Would you say Marcus Voss? Voss, buy high, sell low. Yeah, that's a classic. Like, we got to switch that up. We got to help people. I don't want to say we got to, but like, some people just don't get it. They're just emotional. Like, they're like, oh my God, it's at all time high. It just doesn't make any sense. But yeah, you don't want to do that. You want to buy. There's other ways to do it. Like, technicals kind of tell you, like, I would say if you're going to get into investing, if you want to enjoy it, like, if you want to join or get into like business where you could like literally live off your own, live off your own money and trade it, not day trading, not swing trading, but position trading. Like, you're making these cycle, you're selling at the tops or near the top, and then you're buying very low over like a 6 month to 2 year span. You can live off that. There's a way to do it. You can put some in fixed income and get some fixed income. There's all kinds of strategies, but you don't want to be buying high. That just doesn't make any sense. If you did that in the last crypto cycle, like, look, bro, you're gonna buy at 20K, and then you just made a return. If you sold at the top, which is unlikely, you're gonna make a 240% return. Let's say you bought at the bottom, near the bottom, you're up 1,000%. No, especially with crypto, you definitely don't want to be buying at the top. SPY up or down tomorrow, bruh. I'm not doing SPY up or down tomorrow. That's. I think it goes down over the next 3 days, possibly. That's a probability, but I don't. That's a low IQ question. If it hurts your feelings that I say that, then you're gonna get really crushed. Your feelings are really gonna be crushed when the market doesn't go up or down based on somebody's opinion on the day. You could probably guess a week or two or a month, but a day, bro. That is. I mean, goodness. Imagine a day up or down. You don't want the answer to that, because then you're going to be biased. And then no, you want to learn technicals if you're going to do that. And you should be guessing yourself. If you have to ask that question, you probably need more education. It's obviously they're going to bearish abandoned baby SPY. I'm setting long-term investing. I am setting long-term and investing. Buy low then. CAT is a forward-looking indicator on the market, so be careful. ICE, well, Caterpillar is a forward-looking indicator. You could say it is. Actually, I kind of like that as a bellwether for industrials, but it's in an uptrend. It's not in a downtrend. It's in an uptrend. It's not going to look perfect, but it's in an uptrend. It's receiving stimulus. It's going to benefit from the infrastructure bill coming into the market. So that's Caterpillar for you. And forward-looking, I mean, there's a lot of ways to look at the market too. Interest rates are coming down also. Apple, whatever. Who else is a forward-looking indicator? How about McDonald's? McDonald's is a retail, here's the other thing. Sometimes, what the hell? Oh, there we go. Sometimes these stocks, like, sometimes they just barf. When you get a big sell-off, that's the bottom. That's typically the bottom of the market, right? So I would start with the overall index. I wouldn't just look at like one stock and say this predicts the market. You want more variables. When you're trying to understand how the market works, you want as many variables as possible in your favor. More than anything, you want to know what's predicting the market strength. It is literally bond rates, interest rates, the cost of capital going up or down, and the cost of capital is coming down. The cost to borrow money is coming down. This is how all businesses work. They borrow money, and if that borrowing rate comes down, then the future earnings go up. That's mostly predicting the market, not really Caterpillar, right? Damn, these TikTok things suck. Ah, okay, sorry. Let me back up here. Dude, I would really like for you guys to jump onto the YouTube stream so I can see your comments without getting lost. And you can see the whole chart also. And subscribe, obviously. Help me out. Help me out a little bit. I'm trying to get to 1,000. I'm almost at 1,000 subscribers. So, hey, thoughts on Costco? Costco. I'm not a fan of Costco. Like, it depends on what you're trying to do. Are you trying to maintain? Oh, what the hell? Are you trying to grow your wealth? Are you trying to take advantage of the macro cycle? Or are you just trying to preserve it? I mean, if you're not looking, Costco will be fine. But is it going to benefit the most from what we're seeing? Not really, because consumers are actually going to be slowing. If you get stimulus checks in 2024, which I think are coming, mark my words, this administration is going to send out some damn checks at some point in some way or form. It's going to be obviously like, it's going to be wrapped up in some type of social language and terminology where it's like, we're helping people out. Cool. But Costco will probably benefit from that. But the current environment, the current macro, the current, like the way interest rates are, I don't like Costco. It looks good as a chart. It's fine. I'm not doing fundamental analysis on it. It's just, this is all about the macro right now. So Costco will be fine, but does it have the most upside? Not even close. Not even close. Thoughts on, let's see. Beat up dividend stocks is quality if rates drop. Yeah, there's a lot of Scooby Dooby. Who's the best dividend stock? I don't really look at dividend stocks. I think they're trash. I'm not saying for everybody, but in the new era of QE in quantitative easing, in a lot of printing, they're not going to do as good as growth stocks. They're just not going to do as good as growth stocks or risk assets or even crypto. Unless they have like a really good business, like there's strategies around it, but I would say not really. But there's some good dividend plays. There's some dividend companies that got trashed. Like Verizon, I don't want to invest in Verizon. They have a really good dividend, but I would say honestly, your best bet is just buy I would be more interested in getting into TLT because this is the biggest retracement or the biggest sell off of all time. Government bonds, this will never fail, by the way. This can't fail. It's not going to fail in your lifetime. Dividend companies can fail that are really low. This is not going to fail. You're getting the biggest inflows in history, the biggest inflows to the bond market in history. The Fed just paused. So now from here, you're only going to get a higher market. Look at that volume, right? It is so oversold. It's going to bounce. And I would say it's better to invest in TLT or not financial advice, but you're going to get more upside from TLT. It does pay the same as a dividend stock, and it probably has more upside. And if you do have a recession, this literally goes higher. That's recession proof. As long as inflation doesn't come back, which I don't see it coming back. XRP and Quant are huge, life-changing wealth. Are you a bot, XRP Queen? You always come in here talking about that, and I don't mind it. It's cool. But tell me why. Don't just say XRP is life-changing. Tell me why. People just, oh, well, give me a reason why XRP is so good. Because from what I see, it'll go higher because people own it, but it has no use case anymore. Also, look at XRP. XRP has the curse, the third cycle curse. It has not made new highs since the last 2 cycles. Damn it. Let me use the weekly chart. So look at this. XRP is cursed. Not only because it's old vaporware. Sorry if I hurt your feelings. But like it still hasn't made it back to 2017 highs. How come in the last bull cycle it never made it? It does look like a juicy wedge pattern. Don't get me wrong. but why did it not make new highs? Now, is that enough evidence to say it's trash? No. Number two, the use case for XRP is that central banks would use the XRP ledger. Well, they're not. They're choosing to create their own blockchains private and use their own ledgers. Do you have a response to that, XRP Queen? Quant, I don't know. I'm not going to talk about Quant. I don't know anything about it. BTC, no earnings, no product, no real US. That isn't shady. Well, Scooby Dooby, you're a smart guy, but when it comes to crypto, I'd say you're pretty dirt because I mean, there's a reason why BlackRock has an ETF. Like, there's billions of dollars coming into Bitcoin. So maybe you just want to get a reaction from me. That's cool. But you never have good arguments against Bitcoin. They're stupid. They're old. I mean, my grandma could probably debate you on Bitcoin. You could talk about other coins, though. Most coins are trash. XRP Queen, get on Coinbase. Bro, what are you talking about? I agree. Went back to my Coinbase. I think Coinbase is better for sure. GameStop, bro. GameStop is trash. It's a meme coin. Please don't get tricked into, look at this trash. Do not get tricked into thinking GameStop is ever going back here. That was called the trade. This was financial engineering. The short float, the amount of people shorting, basically borrowing shares and selling those shares, was at a record high. It was actually the highest I've ever seen in history. This is an actual style of trading where you go look at the short float and you see how high is the short float. Above 20% means there could be a short squeeze. This was a gamma squeeze. So basically, a lot of people were short the shares. So you had Wall Street Bets come in and they bought call options, and call options allow you to own 100 shares at a tenth of the price. So they bought so many of those that the bank that sold the shares to the shorters, to the people shorting the stock, they actually had to buy back shares, squeezing the shorts. It's really confusing, but look up gamma squeeze. GME is trash. I'm just going to tell you right now, get out of this trash. AMC, GMC, Dogecoin, Shiba Coin, Pepe Coin, trash trades. They are not investments. So if you want to trade it, great, but this has no volume. There's no interest in GameStop. It's not happening. You might have another meme coin in the crypto market, but bro, GME is trash. I'm sorry. SPY, I mean SPY. Look, I think SPY is gonna have a retracement. We could look at SPY real quick. I know SPY is cool in the intraday. Like if I ever do day trading again, when I get back into day trading, I'm building a course right now. So when I get back into day trading, I'll do more SPY stuff. But right now I'm not focused. I'm focused on crypto. And I'll show you my portfolio pretty soon. Just waiting for Chainlink to make a bigger move so it brings in more audience. And people say, oh, well, I'm going to tell you right now, once my position gets really big, I don't have a lot of followers. I'm going to put it on the thumbnail to attract people to talk about it more, right? And then try to get my course out there to show you how I did what I did. The thing is, I want to be honest with you, where most people are going to just tell you some bullshit. You can make a bunch of money by doing this. No, I'm going to teach you how to look at the market, how to find the best opportunities, but how to think about it, right? It's not telling you what to do. It's telling you how to think about what to do. SPY. What about API 13, bro? I don't know what that is. It sounds like a scam. API 13. Or this is pump into recession. It could be a pump. Listen, there's a real case for a recession in 2024. I just don't think it's anytime soon. It's probably because here's the thing. There's a lot of liquidity into the market coming in from the reverse repo. So let me show that chart on here, right? It's called Shadow QE. It's not showing up yet. Take this off. RRP, bro, this thing is broken on TradingView. It's called RRP, Reverse Repo Facility. And why does it keep showing up on the bottom, bro? No. I hate when technology doesn't work how I want it to. I didn't grow up online. I grew up playing football and sports. But guess what? I'm not giving up because this is where the money's at. All right. So always take care of your health first, though, honestly. Take care of your health, your relationship with the higher calling. Let's invert this. So this is the reverse repo facility. It's basically a facility where a bunch of cash stacks up and the Fed pays interest on it, right? This is why money market funds are paying so much interest. It's due to run out. See, this is zero bound. I know it's backwards. I inverted it. Think of it as draining. As it drains to the upside, what's really draining down, it's actually coming into the capital markets, right? So this is going to be done in somewhere between, I think it's March, April, May, somewhere in the summertime of next year. That means no more shadow quantitative easing. And at that same time, the rate hikes should be actually hitting the market the hardest. And at the same time, the consumer is probably going to run out, and we're probably going to get the unemployment rate higher. So there is a case for a recession. It's just, I think we go to all-time highs before we see a recession hit. Okay. Number two, which is the counter to that. Do you really think, you got to ask yourself, do you really think the administration in the White House is going to let you have a recession? Those dudes rather have inflation than recession. So I think if you do get anywhere near growth falling off a cliff, here comes Joe Biden. Well, not really him, but the puppets, the puppet masters. Just be your own bank. It trusts years to trust the mark to trust the mark charts. Yeah, it takes a long time, bro. Dang, am I that far back? Godly. All right. Anybody want to jump on? Also, it's Sundays. Anybody want to jump on, challenge me, just talk whatever? I'll put you on YouTube. Doing an interview tomorrow morning with a trader. Back test. Most people don't back test. They don't. Would you buy at 5 cents BTC right now, or buy Quant or Link? Hell no. I'd rather buy Chainlink than anything. I'm not buying Bitcoin. Out of all of them, I'm going to be long Chainlink more than anything. Oh, Marcel Voss, thank you. He's probably talking about API 13, which is another Oracle token and a competitor to Link. Hell no. It's not even close to Link. I can have my brother come on here and debate anybody on Chainlink versus these other Oracles because he knows it in depth. The point is API 113 working with Swift, the biggest messaging system? Is it working with the biggest depository trust settlement layer in the world? No, it's not. Is it working with other banks like BNY Mellon, some of the biggest banks in the world? No, it's not. And number two, Link has the best security. Link has the most data by far. Most people use Link. It's not even close. Could API 13 be something in the future? Sure. But do you want to take that risk? Hell no, not in crypto. Buy BTC is something that outperforms BTC. Yeah. I mean, there's a risk curve. Here's a good listen, not financial advice, but here's what you could do. Like, here's an idea. This is all about creativity and being able to adapt to the markets, right? You could go long US treasuries, which are the safest asset. They're the most pristine collateral, even though they just got crushed, because it's the US debt. And it's already, I know people are saying US debt is going to fall apart. Bro, it already fell at a record level. Trust me, they're going to come back in, step in and buy that up. So you could buy US treasuries. It gives you a yield. It also has a lot of upside. You could buy Bitcoin, super risky, the safest of the riskiest assets. You can go Chainlink, even riskier, but really safe, nothing stupid. And then you can go NASDAQ. You're getting exposure to Apple, Amazon, Google, Facebook. All the companies who bring in the most margin are the highest revenue, the highest growth, and they're also benefiting from the Inflation Reduction Act, the CHIPS Act. There's so many ways to do it. So you can go low on the risk curve and then work your way up, and then keep some cash, park it in a money market fund, collect 5%. There's so many ways to construct your portfolio. It just depends who you are, your risk, your risk tolerance, what is your window, what are you trying to achieve? If you're younger and you don't have much to lose, I mean, me personally, if I was young, I would go all in on crypto. Not on most projects, so I'd go all in on something that I understood, that I know is going to make a difference. Not necessarily Bitcoin. You can, but I wouldn't do Bitcoin. If you're older, I would get low exposure to crypto, more exposure to US treasuries, NASDAQ. I mean, Apple, those are staples. Just think about it this way. It's not really a growth stock. Apple's a staple. Are you going to go anywhere without your cell phone? Hell no. Cell phones are basically like, how could I say it? iPhones are basically girlfriends and boyfriends, right? They're basically a reflection of you stuck to you. You don't let it go. That is a consumer staple. The iPhone is a staple. You need it. Little kid, when I was young, we didn't have iPhones. Now kids are 6 years old with iPhones. So my point is, these big mega cap stocks are turning into consumer staples. Like, they need them for everyday use. A lot of them. Google, you probably Google every day, right? You probably use Google Maps every day. Twitter, you probably tweet every day. Maybe not Twitter. I'm not a big fan of Twitter, or X, but it could be something pretty soon. That could be another big opportunity in the market with X becoming a payments network, blah, 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 Elon, blah, blah. Anyway, Microsoft, right? I don't know too much about enterprise software, but Microsoft is the beast. You probably use it every day. Don't even know it. I'd have to ask a computer guy. Amazon, are you kidding me? I order the most stuff off Amazon. Gets delivered to you right away. It's cheap. Amazon AWS is a staple for other businesses because AWS is literally the backbone to web services, Amazon AWS services, and people don't know that. So that's a B2B value stock. So I think the big tech stocks are really turning into value stocks. Like they're not really risky. They're really not. Nvidia was until we realized, oh shoot, AI is here. Boom. So I'm not even a big advocate of Nvidia though. I think AMD and Nvidia are still cyclical. Tesla is very risky. Tesla is not a staple. It is not a staple, but it has the most upside of the big tech stocks. Watch it go sideways for weeks. Bitcoin, Scooby Dooby. He just want to see his own text. He just want to see his own text, his own message pop up. Anyway, let's see. Damn, these things move quick. Okay, let me try to get through this. I keep saying that, but the thing is, I like to talk. I like to answer questions, so I end up getting hung up. Buy BTC and something out. Yeah, watch it go sideways for weeks. Okay, link for YouTube stream. Link for YouTube stream. Oh, it's in the bio. Link is in the bio. In my bio for TikTok. Did you do Amazon? I did not. I'm not. I'm really loaded up on Tesla right now. Big man's coming, but I like Amazon. When is a good time to get into the market? Is it gonna go down or up in crypto? James Miller, I would say, look, stay tuned to my content. I stream 5 days or 6 days a week, really, on YouTube and TikTok sometimes if I don't get banned. And you want to learn more than anything. You don't want somebody to tell you what to do. You want to learn, but I know it's like viscerally, you would just want somebody to tell you. My thing is, I like Bitcoin, Ethereum, Tesla, Chainlink, and Palantir, #1 AI software in the world. Those are my biggest picks. I wrote about this 3 years ago. It's in my blog. I have a blog. I have a newsletter that you could stay up to date with. The newsletter that's in the bio description. I have a blog. I do streaming. I'm coming out with the course. So I would educate yourself first. But if you need to know, bro, nothing's gonna outperform crypto in this next cycle. Nothing. Maybe a couple. Tesla could. There could be some penny stocks, but they're trash. Nothing probably outperforms Bitcoin except for Ethereum, and nothing outperforms Ethereum except for the altcoins. That's all I got to tell you. If you're young, I mean, it depends who you are, but if you want to book a session, you can book a session with me too. It's on my profile. Vale, I'm going in TLT. TLT, I like TLT. I'm not interested. We sent 15 billion to Israel. Inflation is going to come back. Oh, this is hilarious. We sent 15 billion to Israel. Inflation is going to come back. How? I bet you, Mr. Rightus, how is it going to come back? Please tell me how inflation's coming back because we've sent 15 billion to Israel. Is that a good move economically? No, it's not. But it also increases productivity in manufacturing. It all depends on how that money gets spent. Also, where does it come from? I don't think people really know where inflation comes from. Money printing isn't inflation. We printed money from 2010 to 2020, never got inflation. We printed the whole time. We had a war there was a war in the Middle East was still going on. We had the war we had the tariff war. We never saw inflation. It's not that. It's lending. We have high interest rates, so lending. We have broken supply chains. That's what caused inflation. Our supply chains are back online. Is it inflationary? Yes, it's inflationary, but inflation is not going to reaccelerate. You missed the beginning of the stream. I'd go look on YouTube where we pointed out how inflation is not coming back. If oil spikes, inflation, could come back. But for the most part, hell no. XRP is backed by the Rothschilds cartel. Bro, that's hilarious. I don't really know. I have no clue. I'm not going to comment on that. That'd be funny, though, if it was true. XRP to $2. Big army will smash. XRP hasn't even made it back to all-time highs. How does the TLT pay dividends monthly? Oh, they don't, bro. Well, no, it does. It does pay monthly. But from my calculations, I own some TLT just to see. It's paying me like 3.5% per year. So basically, let's say it's a 5% yield. Divide that by 12. That's what you're getting paid monthly for TLT. But it's not even, it says on there, it says like 5%. It's paying you like 3.5%, something like that. GameStop trash. Injective protocol has token value capture design into the trading system. Easy bet. Only reason I'm not even going to trash Injective is because do your own research. His name is literally do your own effing research. He probably did some research on it. I haven't done that yet. What do you think about AMC as a company? Trash. Compared to there's other bets out there. Now, can AMC recover and have a lot of upside because it's so sold off? Yes. So AMC could definitely run back. It's a meme coin at this point. It's a meme stock. It could run up, but don't bet on it. Do not bet on it. You just don't want to take that. There's better bets in the market than AMC, even though it is so sold off. Don't get it wrong. It could definitely fill the gap. Dang, that thing got smashed. I didn't realize how bad it got killed. So yeah, AMC may have a short squeeze. It might have some short squeeze potential. A lot of people are short the stock. They're gonna get squeezed back up. But as an investment, hell to the no. What do you? Oh, that guy said stop. Yeah, he said stop for me. They hold crypto futures collateral in the INJ token, which is protection against selling. Okay. Injective. I haven't looked into it. I'll ask my brother about that. Rivian, perfect buy. Rivian is actually not bad for an EV. I still wouldn't. I think they're very risky, but listen, they're not making money. They're not close to Tesla. They're more expensive than Teslas. They look better than Teslas. I'll admit that. I don't know about Model S, but the trucks look better. But as a business model, Rivian has a lot of work to do. I wouldn't bet on it. When is a good time to get into crypto? Bro, the crypto bull market is taking off. Like it's in leg one right now. We're in leg one bull market for crypto. Um, as soon as Bitcoin got above here, let me put this on the weekly chart or the monthly chart, weekly chart. As soon as crypto broke above 31K, that was the start of the bull market, right? This was the bear market. We had a bear market for a while and then we just broke out. So we're just starting leg number one. So on any pullback, if I wasn't in crypto, I would be looking to get in on any pullback. That's what I would tell myself if I lived another life. No, I'm just kidding. Spy call tomorrow. I don't do spy calls on a daily. I think it's those zero dated options. People are addicted to those. Um, there's a big chance you just lose money. You don't just buy SPY. You want to know technicals. You want to know how to chart. You want to know how to read the price action. Don't just buy SPY calls. If you do it, good luck. I hope you make money, but the chances are it's just a gamble. So I don't promote that at all. Shiba ain't done. Shiba probably goes up, but trash coin to invest in. Can you please check Quant? Quant. What is the actual ticker for Quant? Yeah, let me know what the ticker is. I don't know what it is. What about the bank problems Friday? Bro, FDIC 250K. Listen, the bank problems are probably going to stimulate more liquidity for the Fed. Just like in March of 2023. Banks failed. They couldn't pay their deposits. FDIC steps in over the weekend. The Fed pumps liquidity. Liquidity goes higher. The Fed's balance sheet goes up. Risk assets go higher. I wouldn't even doubt that Bitcoin explodes again just because the bank failed. And it's not because of a flight to quality. Everybody says, oh, well, people are running. Even Kathy Wood says this, and I respect her. People are running to Bitcoin because banks are failing. No, they're not. They're running to Bitcoin, not the people whose bank failed. They're running to Bitcoin because the Fed is printing more money. And when liquidity goes up, when more money supply comes into the system, crypto benefits first and foremost the fastest. That's why it's going up, not because people are running to a flight to quality. There's probably some rich people though that are like, oh shoot, let's get some more Bitcoin, but they're doing it because of printing, of money printing. My guess is that gold is also going to go up because gold typically goes up when the Fed printer turns on, when you get more cowbell or more money printing. Where's gold at? I got to fix this chart. Yeah, gold might go up, but it's not going to go up as fast as Bitcoin. That's the other part. Grow your knowledge of modern futures trading, exchange design, learn injector protocol. Definitely don't get caught in your feelings. Isn't the election next year, so politics might be scrambled? Well, it's a pre-election year. Stocks do the best during a pre-election year, actually. Can you show the previous chart where you have two graphs that went in different directions and tell me what it showed? Just arrived. Welcome. Private. Or yeah. What did I have? I don't know. What did I have on there, guys? Chat. What did I have on their chat? That sounds so weird. I've been seeing these streamer kids. They say they talk to the chat like chat. It's so weird. What did I have up? I don't remember what I had up. Was it liquidity? Was it this? Just let me know if this is what you're talking about. This is global liquidity. This is one of my this is one of the things that moves the market the most that people don't understand about. It's called the speed. The speed is interest rates and liquidity. Rates up, speed down. Liquidity down, speed down. Liquidity up, speed up. Rates down, speed up. It's really simple, but people make it complicated. They're not familiar with it. And there's other stuff too. Okay, yeah, it's this one. So in blue is basically shadow QE. So this is a facility that is at the Federal Reserve where money markets can park cash and get paid an interest rate that literally reflects the Fed funds rate, which are what the Fed's rates are. So you can see that liquidity has been leaving. It looks like it's going up because I have it inverted, but it's leaving because there's better incentive to go buy US Treasuries because US Treasuries are printing more interest than the Fed is. That's why you hear the deficit. You hear the U.S. Treasury is creating more treasuries. The supply is going up. By the way, that supply ends in the first quarter of next year, which the market has now priced in. So, and every 3 months, you get paid 5% every 3 months. So it's a better incentive. So that's leaving. So basically, it's sucking up the government's money. Basically, the Fed is paying for the debt. That's why I call it shadow QE, because they say, oh, the Fed is tightening QT. Well, bro, actually this money coming from the Fed is literally paying for the US Treasury debt. 2.5 trillion at the bottom, which is inverse. So think of it backwards. So far, you've had over $1.5 trillion come back into the system to buy US Treasury to support the Treasury. Janet Yellen loves it. So they can print more money and go more war, right? I'm anti-war, by the way. I'm not freaking pro-war. But I'm not stupid either. I mean, you got to do what you got to do. I'm not going to go into politics right now. I like Trump's approach. It's like, just tell him, hey, we're not going to give you money. You guys can figure it out. But I mean, we should never be in this crap anyway. Anyway, I'm not going to go into that. What's the previous chart just arrived? Oh, got it. Chainlink. Yeah, all Chainlink. GWSO. Was that the ticker you were talking about? GWSO? The hell is this? Global Warming Solutions? What the hell? What is it? Super ESG? Global Warming Solutions? Are you kidding me? That's the funniest name I've ever seen. Global. What a political stock. People will literally see this on TikTok and be like, "Oh, global warming solutions. I'm long. Yeah, I'm pro global warming." People will lose money just to be part of a cult. I'm just playing with you, user 927. I don't even know what that is though. Go all in on ETH. I mean, I'd say go. I'd be long ETH before TLT. Do you think we see a correction this Monday? Yeah, we're gonna get a correction, Luis. We're gonna see a correction. I think once you get the correction, that's when you look to get long. Don't buy the tops. Don't buy breakouts. I think it's better. Or I think it's better to buy pullbacks, right? So you break out. You want to see the break and retest. The retest and hold. You want to get in. That's what I do. And that's what a lot of traders do. Breakout trades are usually scalpers that are in and out in minutes. So that's totally different. Futures just open. Yes, it's probably up. How about, bro, damn, this thing, golly. Okay, there's a lot of comments on here. If you guys want to jump to YouTube, it'll be way easier to read your comments unless you're just on here to just see your own words. How about PayPal? PayPal's trash. Look, I'm not gonna PayPal. I have a friend trading PayPal. He's like one of my closest friends. I told him PayPal's trash, and so is Disney. So don't get your feelings hurt. I told him, what the hell are you doing? He's like, I'm trying to trade the bounce. I was like, all right, cool. Trade the bounce. But long term, I think central bank digital currencies are basically going to crowd out a lot of the revenue for these fintech companies, unfortunately. So they got to innovate better. And when crypto rises, PayPal should do better. But nah. So what's the SPY gonna do tomorrow, bro? I'm not okay. You must be new because, like I said, S&P 500 tomorrow. That's just gambling. I think this week we have a correction in the S&P, and then we go higher. Thoughts on Roku? Oh, Roku exploded, bro. Look, Kathy Wood that's her number one position. How crazy is that, right? This is her number one position. This thing is on fire. Do not buy it. Like, this thing is up so much, you want to wait for a pullback, and it's wild. Roku is very hard to predict. It's very hard to predict. Intraday, I like to trade Roku. I haven't done it lately, but you can trade it intraday, but like, you want to wait till Roku gets above 99. Like 100, you want to see it break above 100 and then retest. Now, with rates coming, I'll say this. You have more, you're in favor if rates keep falling, okay? So if you're in Roku, this is what you want to look at. You want to look at the 10-year yield Okay, this is government bonds inverted. The 10-year yield. It's very rate sensitive. This is why it's moving up so strong. Not just because of earnings, because rates are coming down and the earnings are good. So it's very interest rate sensitive. So you probably get rates possibly retest. You want to watch this. Rates might come up, and when they start to roll over, boom, Roku's probably going to go bananas. But if rates keep falling, Roku probably still goes bananas. But if it goes up, rates go back up to some degree, Roku's going to have a correction. There's other factors. I'm just saying in general, you want to wait for the rollover. See, you're seeing this head and shoulders, shoulder, head, shoulder, and then maybe the breakdown like right here. Once that comes down, Roku's probably going to go wild. The Cathie Wood stocks probably go wild if rates keep coming down. Is this South Korea trade halt true? I don't know. I haven't even seen it, Jonathan. What up, John? Bro, Google top 10 cryptos. Oh, you want to see the top 10 cryptos? Let's see. Look at gas prices coming down. You guys missed the beginning. You should have made it to the beginning. What do I always use? Coinmetrics. Coinmetrics, I think. Is this Coinmetrics? Here we go. Top 10 cryptos. You guys want to look at the top 10 cryptos. Chainlink's going to bust into this, by the way, pretty soon. That's my thoughts on it. Okay, let's see. Accept. Oh, you got Bitcoin, Ethereum, Tether. That's a stable coin. That's not something you invest in. It's a stable coin. BNB. I don't know how this thing is up so much. It's a scam. It's freaking Binance Chinese coin. Shout out to the Chinese. But no. XRP, trash. In my view, probably goes higher, but XRP lost its, like, XRP is already pretty big. There's no way it gets past a billion, 90 billion market cap. I think all-time high. I don't think XRP gets back to all-time highs. I don't think it happens. I could be wrong. I'm not trying to crap on your coin. I hope it goes up, but I just realistically don't think it does. USDC coin yielding 5% right now, but it's not an investment. Solana, they're working with Visa. Solana has a lot of stuff going for it, but I think ETH kills it over time. Cardano, trash. I think it's just plain trash. It probably goes up, like I said, but Ethereum really crushes a lot of these coins. Dogecoin, that's a meme coin. You need Elon to come back in and pump the coin. Sorry. Tron, trash, but I don't know too much about it. My brother would tell you more. Chainlink, that's what I advocate for the most. Could you call it shilling? Sure. But I mean, there's other coins, Bitcoin, Ethereum. I still think all these coins go higher, but I think Chainlink has the most fundamental upside by far. What else you got down here? Uniswap, DAI. You have Aave. I kind of like Aave. Internet Computer, be careful. It was a scam. Maybe something happened. It got better. I don't know. Hedera Hash, Filecoin. Look, I'm not the expert on all this stuff, but I do like the Graph. The Graph is one of the leading protocols in its space. Binance created a stablecoin to perpetrate Ponzi, Cake, and BNB up for their new ecosystem liquidity. Doifer, I don't know what you're trying to say, but are you trying to say that basically they figured out a way to engineer more liquidity even though there's really not? They're just like buying back their own coin or something? I think that's what my brother was telling me. Yeah, I got to go with my brother because he's a software engineer and he understands crypto. He understands the technicals of crypto way better than I do. GSAT is the satellite provider iPhone 2. GSAT, okay, satellite provider for iPhone, 2.5 billion market cap, 66% off the last bottom. Nice. I hope your guys' investments go higher. But I'm going to tell you the truth of what I think. If I don't know it, I'm not going to give an answer because I don't know what it is. It's stupid for me to comment on something that I don't understand at all, but I'll try. What was the previous chart you showed, your resonance? The previous chart, we're talking about the 10-year U.S. Treasury. Solutions, I'm hoping for Solana run so I can sell. Yeah, hey, Solana looks good on a breakout, okay? It looks good. A lot of people, so many people are bullish on Solana, but I have reason to believe that Solana is not what everybody thinks it is, okay? I could be wrong. I'm not the one to actually make the best case against it. But from my knowledge, from what I understand, Chainlink, for sure. Who do you want backing your coin, Visa or central banks themselves, the business of money? So anyways, I'm not going to go into that. Where you see SPY this week, I think SPY pulls back and then goes higher. We do have the inflation report next week. I think it's going to be, let's see, it's going to be next Tuesday. It's going to be next Tuesday, the inflation report. I'll be live for that, by the way. If you guys are new, I go live all the time on YouTube, TikTok. If you want to see the charts, go to YouTube. But for the most part, the market probably pulls back, goes higher, and this is just a guess, pulls back, goes higher, and then sells off into the inflation print to anticipate the inflation. So I don't know. It's kind of pointless. You got to go day by day to really see. I do lives and I show the chart, so you'll see what I think. I got to see the price action though. It's all about price action. Has something changed? What do the macros look like? Where are yields at? Where's the dollar? How's oil? There's all these factors. Polkadot and Cosmos are the best coins out right now, bro. I'm sorry, you're tripping. Fourth perspective. I respect the fact that well, actually tell me why. I don't want to trash you. Tell me why you think Polkadot and Cosmos are the best coins out right now. Do you mean from a price perspective or the actual project? Because Polkadot, they're supposed to be interoperability, but they got passed up by Chainlink, who is actually interoperating and bringing tokenization and connecting to other blockchains to the real world. So I find that hard to believe. Tell me why, though. Don't just say, I mean, you can say random stuff, but I'm going to challenge you. Can you show the previous chart again? I don't know what chart you're talking about, bro. I have the 10-year up here. What do you think about Citizens Bank failure? I think banks fail all the time in different regions, and the FDIC will step in and they'll insure 250K, and the Fed's balance sheet goes up and more liquidity and crypto goes higher. That's what I think. I don't think it's listen, there's a lot of fear pouring out there, bro. I'm telling you guys, there's so much fear pouring out there. People are going to tell you, banks are collapsing, guys. It's the World War III. Everything's ending. That's how they get, it's clickbait. I mean, that's my opinion. We'll see. The banking crisis in March was way worse, and the Fed stepped in. FDIC comes in. They actually did more than 250K deposits. You're fine. You're not going to lose your deposits unless you had over the limit, over 250K in cash, which none of you guys on here probably have that much cash. And so that's why you diversify your banks or whatever. Either way, you're fine. And most people are leaving. Here's what's going on if you want to know. Money market funds are paying so much interest that consumers are leaving. They're pulling their deposits out of banks and they're putting them in the money market funds. So the banks actually use your deposits to lend money out. So what happens if you lend money out and then all of a sudden the collateral that's based on disappears? All of a sudden you have to sell your treasuries, and treasuries are down 50%. So you sell it for a loss and now you're underwater and now you collapse and now FDIC comes in. That's just the fast run, right? Little early for a bull run. Cool. I mean, I like the pushback a little early for a bull run. You could justify that for sure. I mean, I think we're leg one of a bull run. We're almost at all-time highs, and you're saying it's a little early for a bull run. The Fed just paused. Oil's not really doing anything. The dollar pretty much peaked out. Yields might have peaked out, maybe not. Economic activity is starting to pick up in some sectors. The fiscal policy is coming. I can go all day. I would love to debate anybody. If you guys know anybody that wants to debate the bull market or just macro in general, reach out to them, send it to my DMs, whatever. I'll debate anybody so that you guys can learn. Because here's the problem with this space. Here's the problem with finance. Nobody gets challenged. They just go out there and say a bunch of crap, and that's cool for entertainment. But what we need is people debating their points, debating debating their actual theses, so you guys can hear it and decide for yourselves. Let me use reason. Let me use logic. Because now you're going to get both sides. And that's where you get we're looking for the truth. We're not looking for somebody telling us what to do. You're looking for the truth, even though most people are looking to be told what to do. So, sometimes you learn stuff from each other, but you want people to debate. Iron sharpens iron to get the best out of your financial market experience. You want that. You want debate. People are scared to do it. So like I said, if you think somebody wants to debate, if you want to debate me, jump on. I'll debate anybody. Crashing coming. Oh, here we go. Here goes the Achilles 28 crash coming soon. Banks are failing, then big crash after. Here, watch. I'll literally debate this guy right now. Oh yeah. Thanks, Tigger Media. I appreciate it. I'll debate this guy right now. He's probably not gonna debate. Achilles 28. You probably even got 1,000 followers. I wish you did. So banks are crashing. I mean, banks fail all the time. Number one. Number two, you need the big banks to fail for there to be a real black swan event. JP Morgan, Goldman Sachs, Wells Fargo, Citibank, Morgan Stanley, they're not collapsing. Okay. Number three, We did have a banking crash, and guess what happened, guys? You know what the result was? More liquidity. The Fed stepped in. The Fed's balance sheet came in because they backed all the deposits. The FDIC backed all the banks. You're not going to get a crash. That is fear porn. Can it happen? Sure. But based off what? Based off what? US Treasury's down? Well, the Fed will step in. Okay. So that is fear porn. That's what I'm talking about with people coming in here. Crash coming soon. Banks are failing. Then big crash up. They say it and it never happens. And because they can't back their own point. They're just saying it because it feels good. It's like a rush. Like, oh, I'm going to get attention here. Yeah. Nobody talks to me. No, I'm just kidding. So, bro, back your point up. If you're going to say something that stupid or that drastic, back your point. If you're going to come on my stream and say stuff, I don't care, but you're definitely going to get challenged. So just make sure you back up what you say. I respect that. But if you're just saying random crap because why are you're saying random because you heard it? Are you really trying to help people? Well, then back your point, right? What do you think the market does this month? I think we're in hey, look, Santa Claus rally. Santa Claus rally. That's what I think. Santa Claus rally. So I can tell you guys, like, we're kind of late in the stream. I got to go to the gym. I need to work. I haven't worked out for 2 days. So I'm going to go hit it. But before that, I'm going to tell you why I think we have the Santa Claus rally. Dang, I missed a lot of, bro, how do I keep missing all these see, bro, TikTok, if you see me live, go to the YouTube stream if you want to comment, or else I'm going to miss your damn comment because the stupid, the damn software or the way that TikTok sucks. Okay. The way they set it up really sucks. It like pushes all the comments down and I can't see them. And I know there's a lot. So it's like, you don't want to see all of them, but for me, I want to address your comment. I want to address your question. I'm going to answer your questions. You want to debate me? I'll debate you. Right. So for my style, jump on YouTube, ask your question. You can jump right back on TikTok, but at least it gets saved here and at least I can see it. Right. What do you think the market does this month? I think we have a Santa Claus rally. I think we pull back, we hold and we go higher. What do you think Chainlink retract before and going back up? That's really hard to say. I'm gonna answer this real quick. I have support for Chainlink over at damn, it's moving up again. I'm thinking about buying more actually, even though my rules are don't buy breakouts, buy pullbacks, and I freaking missed that down pullback earlier in the week when it came down to 1050 right here because it was so quick. It just poop and I was like, damn it. So anyways, I should have added right here. I messed up. I'm already pretty deep. I'll show you guys my position if you stay tuned with the content. Hit the notification on YouTube if you want to know when I'm coming in. Or I think if you're subbed on TikTok, you actually get it also, right? It should tell you I'm live. I usually open because I'm going to cut these clips up at the beginning. I'm going to open with the data, the presentation, then I get to Q&A, whatever. So what I think Chainlink comes back to, dude, it looks like it's going to head to 15 and then come back to 12. I don't know. But if it does come back, I'm going to say 1050 I like 1050, $10.50. It needs to hold above 10. I would love a nasty, nasty sell off on Chainlink. You think we see all-time highs by Santa Claus by December? You know what? I said Santa Claus rally, then I took it back or I said all-time highs. Then I was like, you know what? I don't know, guys. But then we had this vicious rally. Now I'm like, dude, we might go to all-time highs. I think the Qs, okay, I don't know about SPY, but I think, I'm going to tell you guys right now, mark my words. You want to call me out? Call me out. Have fun. You guys want to see blood. So that's fine. I'm not scared to be challenged. I've done much harder things in my life than be wrong about something. I think the Qs can go to all-time highs. This pattern, I mean, like the setup is here, and I'm going to go over that right now. We're what, 10%? I think the Qs can hit all-time highs by the end of the year. The SPY maybe, but I think the Qs can. Let's see, top 3 stocks on sale right now. Tesla, number 1. If you're looking long-term, Tesla, number 1. Number 2, I would say AMD, but it's starting to rocket higher. I don't really know. I know Tesla for sure. Palantir, I like Palantir, but it's really coming off. These are stocks I know. Okay, I didn't look at the whole market. I like technology. I like innovative plays. I like growth stocks, especially with rates peaking. I like Zoom. Okay, Zoom still has a great business model. It's very undervalued right now. The PE is so low, and I'm not even a PE guy, but they're very undervalued. I like Tesla. I like Zoom. I will get back into Zoom because you guys know I was in Zoom earlier, and then it broke the pattern. I'll get back into Zoom if I have enough capital to get back in it based on some other things that I'm doing. But I like Zoom. I like Tesla. I'm sure there's other stuff that I don't know about. Like there always is. But I like Zoom and Tesla for the long haul. Definitely Tesla. I think Zoom's going to be great. I like Palantir, but Palantir just ripped higher. and it probably breaks out and goes to like 20, 20 something. But Palantir, dude, it's a monster. No debt, growing its cash flow. It's about to go in the S&P. It just was positive for 4 quarters in a row. So now it's going to have S&P inclusion, which means the S&P is going to buy it, which means money market funds are all going to buy it, which means more buying pressure, less shares. Palantir, but is it at a great price? No, I wish it was lower. So Tesla, Palantir, I like Zoom. That's all I can say right now. I mean, you have the big caps, but those are my favorite personally. Is that financial advice? Hell no. That's my opinion. Bro, using TA on rates. Oh, Scalp Net. What do you let's see, using TA on rates? That is actually kind of valid. You can't really do the same thing. Stock rates don't move the same way as stocks. But all you do, look at this how I know this fool is watch, where's the button at? Don't get offended either. Here's the thing. This guy said using TA on rates, but this is the funny thing right here. Stupid. Okay, rates, the inverse to rates are bonds. So bonds are an asset class that trades. Literally, they move in opposite directions. What does that mean? That means if you want to know where rates are going, look where bonds are going. You can do TA on this. We literally called it out. Oversold. Okay, extremely oversold. Bullish divergence. Price is falling while the pricing action or while the pressure is going up. Therefore, we're going to have a big blow off top. If you follow my content, you already know we call this big explosion in rates, well, bonds. And we said exactly when bonds move up, you're going to have a big, actually go look at my damn Scalp Net. I'm just calling you out because you tried to be funny, but it wasn't that good. Go look at my last 3 videos. I talked about rates coming down. I thought they would collapse. Yeah, so if bonds break out, oh, you guys can't see it on YouTube. I'm sorry. If bonds break out, rates go higher, period. I mean, rates go lower. Sorry. They move in opposite direction. Cosmos, don't really have it. Hero, the hell is Hero? Don't know. How do you see stocks in 50 years, bro? Are you kidding me? Still 50 years? Golly, still rising or desperately down? I think they're higher. People are optimistic. They're greedy. DOT and ADA are flying. Yeah, ADA, DOT are moving up. Litecoin, I don't think goes back to all-time highs. AVAX, not sure. Amazon, I like Amazon. Is it me or did we just print 20 trillion since 2020? They could have print our debt away. I don't know about 20 trillion. They printed a lot though. I don't know about 20 trillion. Is it me or, oh, you already said that. Spot on. Good Samaritan. Hey, you're a good Samaritan. Warren Buffett raised 157 billion in cash by selling stocks. First time since 08. Fact check that person. I don't know how true that is or why. There's a lot of reasons for that. He probably got out of a crappy position. How about Quant? I'm not looking at Quant. AMD looks good. I'm done with the stream. We've already been on for 2 hours. I got to go to the gym. So I'm just running through these. Subscribe if you want to know more, or if you're interested, or go check out the YouTube video at the beginning. This was literally about inflation. Inflation is not going higher. There's bigger risk of recession. What do you think about Quant? Everybody wants to, okay, I'm done. Hey, appreciate you guys. I have a newsletter if you want to check it out every 2 weeks. It's not going to be free forever. Building a course. I'm live Monday through Friday. If you want to see it in real time, hear what I have to say on YouTube, you can watch back the video. And I do macro, I do technicals, I do fundamentals, right? Oh, we didn't even look at earning. No, we did look at the fundamentals. Earnings are still positive. Anyways, catch you guys later. Stay blessed. Get your workout. Hope you guys get better every single day. Stay blessed. All right. Catch you guys later. Thank you. All right, YouTube.